right now. So if you go to Polyfactual Twitter, yeah, it's right here. Let me just check to see if we actually are live though. I think we are. Okay, good, good. Yeah, for some reason, okay, there it is. I always wait for like the little pink circle thing to appear. Okay. All right, cool, man. Well, yeah, thanks for joining me, Gabe. Is it Gabe or Gabriel? Do you prefer?
Either one is absolutely fine with me. You could
Cool,
also do Lex. Some people do Lex. I'm easy.
cool. Yeah, no, same. I go by whatever. Yeah, yeah. So thanks for joining me. I'm really excited to talk to you about about Ace and what you've been doing. Obviously, we just opened up our Ace round, so we had I think we did this like a week ago, and so far so good. I mean, we've raised I think about 36 million of our own token, which
Awesome.
is really cool, and it's helped us kind of stabilize things a little bit. But I wanted to bring you on to kind of discuss more of it because I still don't think a lot of people know about what ACE is or what you're working on. So maybe we could start off just with some introductions. Who you are, what you're doing, and maybe give us like the high level.
Yeah. So my name is Gabriel Shapiro. Also sometimes known as Lex Node on Twitter, aka X, and I'm a 16-year corporate and securities attorney in the United States. And about the first 7.5 years of that were in what we call big law, doing big ticket buy side tech M&A in Silicon Valley, but out of Silicon Valley branches of big Wall Street firms. And the last 8-ish years have been doing crypto law in one guise or another. I had a boutique practice, mainly being company side for DeFi Labs companies, and then I was general counsel of Delphi Labs for several years. And while at Delphi, we incubated my current project, MetalX, which basically does on-chain corporate finance, so to speak. We create smart contract-based workflows for securities transactions of various sorts, and as part of that, we issue tokenized securities, mostly at this point for representing equity in startups.
Yeah, so it's really interesting. Like I feel like this is a super new concept too. Like so the one thing that I'm able to like glean and how it's kind of differentiated from the other kind of ICM platforms that do raise rounds like this is it's raising in in a project's own token basically. So like the term is like ACE, which is asset conversion to equity. Um, are you guys the first guys to to do this, to spin this out? And like what why did you choose to do like raising in assets like pumped out fund tokens instead of say USDC?
Yeah, well, actually, so we initially we have an app that raises in USDC, and just kind of ordinary safe rounds, safe plus token warrants, etc., using the same technology. And the so we had that already. That was the first thing we built, and I started working a lot with, quote unquote ICM projects on Solana, a bunch of different things. MetaDAO is one of our clients. Um, um, and obviously, I'm kind of aware of Believe and Bags and some of these other things. I was aware that, Pump Fun had started to sort of have more like protocol project tokens on it, as part of their hackathon, and for other and independently. So people were actually starting startups around Pump Fun token launches, which I found quite interesting. And there's these other things as well. There's I won't even name them, but there's a bunch of projects that express interest in trying to get tokens to be linked to equity somehow. So a lot of times they are, the concept is like some foundation holds a bunch of equity, And if you own enough of the token, you can get access to that, or perhaps if there's a liquidity event with that equity, they'll buy back the token. So there's just been a lot of buzz about these things. It's kind of the ICM meta, so to speak, and people started asking me, is this stuff legal, right? Or can we make it legal? Can we do this sort of thing? And I think the answer on that is sort of some are, some aren't. There's a line, and the line is obviously arguable. Lawyers like to argue, but in my opinion, the line is often being crossed. But what I think is the case is that even though there is currently a lot of interest in being token only and trying to make tokens as close to equity as possible, I think that VCs, will continue, and projects many of them will continue, whether you like it or not, and we can argue the merits. I'm happy to debate it myself, but we'll continue to want to have both equity and tokens. And the reason for that is that they're regulated very differently. A token can't really have rights. If it starts to have rights, well, now you're looking at a security and much heavier regulation. Conversely, a security, even if it's tokenized, has certain frictions on how it trades and so on. So, and we now have a law upcoming called Clarity. Looks like it's probably going to get passed in Congress that very clearly recognizes this line. And so, that's going to mean that projects probably want both in most cases. So I just thought, well, is there some way that we can put early token holders in the same position that VCs typically want to be in, which is that they both have equity and a token? And I thought, well, why not do it an equity raise with your token, right? Just accept the token. And the concept behind it, in my opinion, is you don't want to convert 100% of your tokens into equity. You really want to hold both, and you want to do this for projects that have distinct value stories around their token on the one hand and around their equity on the other hand. Binance, I mean, again, it's in disrepute, but a lot of people, because there have been a lot of rugs, so to speak, of token holders when there's like an M&A event of the labs company and it only monetizes the equity. But on the other hand, there are a lot of dual token equity success stories. For example, Binance, right? I would have no problem with owning both BNB, the token, and Binance equity. And if you're bullish on Binance, you should want to own both of those, right? So I think, this is not the be all end all. And I don't think every single project should be dual token equity and do an ACE round. But I think there's going to be a lot of projects that launch a token to get their feet wet on Pump or on BankerBot or any of these things. And then later on, they might want to get more serious and also have equity investors. And then they're going to want to bring the two together.
Yeah, I mean, it seems to me too, like, when we launched our token, and I think this is true for a lot of people, like they launch a token, they build real value in their company. They do the deals, they're building products, they're actually building value, they're on a pathway to acquisition. But a lot of times that's not reflected in the price of the token at all, right? I mean, the token is almost like completely separate. And I think one of the things that interested me in this, was that, this was almost a way to combine those two things, or at least, in part back the token with actual like company value, right? So like, like for instance, right now, our with our ACE round, at least for 2 months, Polyfax is backed by 7% of the company's value, basically. To me, this is kind of a game-changing feature, and it's what initially interested me, because so many times the fundamentals of the token are completely separate from the actual product that's being built.
Yeah, indeed. Yeah. And there's lots of interesting things. People can decide whether they're more bullish on the token or more bullish on the equity, and of course the price. The interesting thing about denominating the round in the token, like literally like saying, okay, this company is worth 50% of this token supply or whatever it is, right? I can't remember what yours was, but is that as the price of the token fluctuates, assuming that the equity fiat price is constant, it also creates interesting market opportunities for people to play this. Maybe they think the token is undervalued now relative to the paper valuation of the company's equity by VCs. On the other hand, that is just a paper valuation because the equity is not trading. So, maybe it doesn't mean all that much. And people can play this all kinds of ways. And, I think it's very interesting.
Yeah, I mean, with the Pumpcade round, it was interesting because that was the first one that that kind of went up, and I think, let me see if I have their round up. Yeah, it's right here. They raised like 43 million, in their round, and it was really interesting because the initial investors, the token holders, got in at basically the same time as the VCs got in.
Yep.
Which I think that's like the other dynamic here, right? Like you as a holder can now get access to like a unique type of angel access to these companies. And like before, like, I participated in some angel rounds, and, it's very like, it's all done through, Telegram or phone calls or whatever. And, there's no actual platform facilitating the ability to get into an angel round company early for
Right.
for like normal people. What does the landscape of that look like? Like, in terms of the ACE raises, do you guys like, what does the overall landscape of that look like?
Yeah, well, I mean, there are some, to be fair. I mean, I think Echo did a good job under Kobe's leadership, and now it's a little bit different. It's more AngelList style with these syndicates. So you have to be in one of the syndicates to participate. And a lot of people have ended up, not a lot, some teams have ended up doing Echo and MetalX rounds simultaneously because, they're happy to add the syndicate, but then they also have certain other independent people who aren't in a syndicate that they want to get into their round, and they find MetalX to be a convenient way to automate that. So I think that's a good one. Stripe Atlas has, what I would consider a much simpler version of our overall kind of safe round functionality, where they just have a safe, right? And you just use Stripe payments. But automating these things in general is interesting. We do it 100% on chain. So it's completely non-custodial, and all the legal agreements are on chain, and you never do a DocuSign, right? You sign with your wallet, and you get a tokenized security at the end. Obviously, that's initially illiquid, but after you've held for a year under Rule 144, if it's a U.S. raise, the company could actually make that liquid, and they could let their interest in their safe trade potentially. So, we want to get into liquidity solutions on some of these things, and I think once we do that, that'll be an even more significant distinction from some of these other fundraising platforms.
Yeah. Do you guys think that your platform is probably the closest to solving that problem? Because that's huge. Like I don't think people realize, maybe I'm overblowing it, but it seems like if you make private capital liquid, that's like a big deal. Just like in my mind,
Yeah.
That seems like a pretty big deal.
Yeah, for sure. There's going to be, we're probably going to do it with MetalX's own stock sometime this year, I would say, to kind of just learn all the ins and outs of it and kind of prove that it works, right? I think the challenge of it is more social than technical or legal. If you have a really, really great company, you want to delay your liquidity event as long as possible. So right now, I had a post that went viral about Anthropic secondaries, where Anthropic is really cracking down on various types of attempted secondary transactions in Anthropic stock or derivatives of Anthropic stock. Right? They don't like that. They don't want that. OpenAI doesn't want that. SpaceX doesn't want it. None of these companies want that. Back in the day, FTX was doing it, and I'm told Coinbase, when it was pre-IPO, wasn't happy that FTX was trying to make its stock liquid, right? And so there's a tension there. What I think, I don't see any way of changing it because it's based on incentives. Your incentive is to pump your paper val as high as possible, right before you go public, and then that's kind of your money shot where you finally dump on retail, so to speak. And that's just how it works. Sadly, that's just how it works. But that will keep going as long as there are VCs willing to throw massive amounts of money at these companies while they're still private. But I do think there is a long tail, and I think this is what the ICM meta kind of shows. Pumpcade started as a pump fund meme coin, a fair launch. That's part of why they needed to do an ACE, because they didn't even own that much of their own token because it was launched on the bonding curve and all of that, right? And I think, as VC capital concentrates more and more toward the ultra winners, there's going to be a long tail of startups that want to try to do things differently, attract capital in different ways. And because they're no longer going after or have a good chance with that 10-year long VC capital, they're going to need to find ways to make the investment liquid. Otherwise, they're just not going to get invested at all because they're dealing with shorter term investors, right? So I'm very interested in playing that arena. It won't be the blue chips, so to speak, but I think the long tail can be very interesting. And every once in a while on the long tail, you hit a winner like Pumpcade. People who are early to Pumpcade, are doing phenomenally well, right? So that's kind of my thesis around it.
Do you think, just from my kind of, I don't know a lot about this space, but would it be possible to, when you get the SAFE agreement, you have that, you as an investor, can you transfer that to someone else? Is that how the liquidity would work? So you
can. Yeah, there's a bunch of paths. Let's just take, the ACE rounds were done as Reg S's. So, from a US perspective, after you could transfer freely among non-US persons pretty much immediately. As far as US law is concerned, they don't care about that. And then after a year, you can, in theory, it can trade completely broadly. For what's called Regulation D private placements, which is more the typical VC private placement that has U.S. investors included in it, there's a year-long holding period for non-affiliates, and after that year, again, you could trade relatively freely. Even during the year, you can trade under an exemption that's called 4A7 to other accredited investors, subject to certain conditions. So these things are actually very possible. The liquidity is possible. I think adding the infrastructure to make it easier will make it more likely to happen. I mean, that's what we're building right now. We're building the liquidity stuff right now. And there's basically two ways you could do it. You could do it as I should explain sort of how our protocol works. So the way our protocol works is we initially issue NFTs. Those represent registered ownership positions in the relevant securities. They have all the metadata that you would need to satisfy the statutory requirements of what an entry on a stock ledger is, the unit amounts, the names of the holders, all these things. And then we can convert those natively in protocol to ERC20s, so that all those positions become fungible and become DeFi composable, right? So we're building liquidity paths for both of those. You can trade OTC, the registered positions, and that basically means you decrement the balance on one of the NFTs, and you either increase the balance on another NFT or mint a new NFT with the delta, so to speak, to some new holder, right? And so you could do that with peer-to-peer OTC style, like Bloomberg terminal style trading logic, or additionally, you could just let some holders turn what we call scriptify their registered positions into ERC20s, and those could trade on AMMs. So, I'm hoping we'll have both of those live, by the end of this year, for at least a few projects.
Yeah, I mean, and in TradFi, I know for a fact that this does not exist in crypto yet. I know for a fact that it,
right.
There might be people working on it, but my hunch is that you guys are the closest to it, because all of that would be denominated, so that transfer value would also be denominated in the token that initially, that
for ACE securities. Yes. Yeah.
Yeah. So basically you're able to transfer into the token and back into the, into the token that you were raised in, which I think is really fascinating.
Yes. Yes,
Yeah.
potentially. Yeah, depending on like how the particular projects run their rounds and stuff like that. Yeah.
Is there an advantage to using the token as the denomination as opposed to just USDC, for instance, for that transaction process? I know we're kind of
Um,
getting into the weeds here, but
yeah. Well, I think it depends on the project. If it can solve certain problems, it solves alignment problems with the community. It solves, if the team doesn't own enough of the token, right, and they want to enter market making agreements or other things, and they need to lend a bunch of the token for those, it can help solve that problem. If the team just decides one day that it doesn't want to put any value into the token anymore and wants to be honest about that, it can create a great conversion path to just getting rid of the token, right, and just converting everyone into equity. And if the team has revenue share on the pools of the token, every time one of these ACE things launches, there's going to be people arbing it in different ways, buying and selling the token, and that's going to generate volume for them. That's going to be fees for them, and so that's a form of revenue for them as well, right? So yeah.
interesting. So, like with uh, so so I have two questions that came to my mind. The first is like what specific assets, like for right now, it's just pump.fun tokens, right? That
Yes.
can be converted. But theoretically, it could be like any asset converted into
Yeah.
equity,
Yeah.
which is another dimension of
Yeah.
kind of
Yeah.
craziness, which I think is really interesting. Like you could technically have like a ace round for like an NFT collection if you wanted to.
Yes, yes, we have not built that, but yes, you could do it. And I think at this point we have on the normal app, the non-Ace app. I think we now have an option to take. Like I think they don't have to come from Pump Fund at this point, but it can be any token. Yeah.
So traditionally, like private, like private markets, private capital, all that stuff. There's a whole subset of people that love the opaqueness of it, that love the type of like I can hide in this
Yeah.
place, right? How do you see that? Like you guys are doing the opposite, which I think
Yeah.
is great. I love the decentralization and transparency of it. I think it's a world that hasn't like been touched yet, which is why I'm excited about it. But like, do you see resistance there? Like, do you see a lot of people being like, no, no way am I doing this,
Yeah,
etc.
there's definitely resistance. When I started all this, I kind of thought, well, like NFTs weren't dead yet, and I kind of thought, well, like you flex with your Bored Ape, why wouldn't you flex with your, early open AI equity or whatever, right? I thought there could be a more social element to it. And I still think there potentially can be, but it's not the current meta. The current meta is privacy, institutional privacy, personal privacy, and that tends to be just the current bias rather than flexing. Um, so that's fine. We have privacy solutions, like we can encrypt like the investor name and the registered position. Can encrypt certain other information. So there's some privacy, and we're working on even more robust privacy solutions, like to hide the actual, like the deal itself can only be visible to the issuer and its participants, including on chain. There's different ways you could do that. You could do that with the zk Sync Providium. You can also do, even with Railgun at this point, you could do. I believe you can do sort of private execution with public smart contracts. So that's a very interesting thing. Aztec is out there, but requires changing, then the full smart contracts can also be public. So, we're watching the privacy space and watching it evolve, but we have some quick fixes in the meantime that give a reasonable amount of privacy. The other thing is like people don't really understand this, but owning equity in a company is not traditionally considered something that's supposed to be private, right? Like, there's the Corporate Transparency Act in the United States. There's other things like this. People in crypto are used to the offshore world, like Panama, and that indeed does provide privacy solutions for those. But there's also a reason why those like don't scale very well. With like there's a reason why OpenAI is not a Panama company, right? So it's different strokes for different folks, but I think we can find a happy medium there, and different kind of projects and different kind of investors within the same project will want different levels of privacy, and ultimately we'll be able to accommodate all that.
Yeah, I mean, I definitely I've heard of the privacy meta taken off too. Like I actually did buy some Aztec recently.
Nice.
Just because I thought, I think it's a cool protocol. I mean, I do think, but I think that I don't know. Like, I think that there's some truth to what you're saying. I think that if you were in an early round of like a hot company, I think that's a flex. I mean, I
Yeah.
think that is like, hey, guess what? Like, I share the cap table with so and so, right?
Yeah,
I mean,
and it could offer some very interesting things. Like maybe someone out there wants to do an airdrop to all polyfactual equity holders for whatever
yeah,
reason, right? And you actually don't need to give up privacy for that. You just have to know, what that particular NFT, is kind of like certified to represent an equity position in polyfactual. But I think, why not? Why not? I mean, it's a very interesting thing to be able to compose on top of.
yeah. I mean, in my mind too, I think like a lot of the reason why people like privacy, from what I understand, is actually to just not because there's like tax loopholes and stuff. I
Right,
don't know
right,
the details of it, but that's why a lot of people like investing in these private companies because there's not,
right.
like because they're not public markets basically. They're not publicly
Yeah,
traded.
yeah.
So there's that aspect of it. I mean, has this type of thing ever been tried like in a public, transparent way? Like, has private capital markets like this ever been really like transparent? Like, because you could be opening up the floodgates. I just want to know
Yeah.
a little bit of history
I
of
don't
this.
not really like this. There's things in a similar direction. Like if you're, Nasdaq private markets is something that I used to do deals on when I was in Big Law. We did like private tender offers on Nasdaq private markets. So if you're like a member of Nasdaq private markets, for you, there's stuff that looks semi-public, right? Like trading in Anthropic secondaries and so on, right? So it's not fully public, but it's public within a group, so to speak, right? So we're just kind of expanding the universe a little bit by putting it, on public blockchains and not having these gating requirements to compose on top of it. Um, but I don't think it's categorically different. It's just a difference of degree. You know?
What type of companies have been approaching you? Like, have expressed interest in this, and what type
Yeah,
of
all kinds, all kinds. I mean, obviously the ACE thing is sort of its own thing. So projects that have, both a combined token equity plan have been approaching us a lot since that launched. We also have, we work with MetaDAO. We work with an upcoming project called Umia. They're for projects that want to go token only and really we've provided a set of corporate automations around setting up legal entities for those that respect the token as sort of the exclusive source of value and governance layer for that project, or decision market in that token as the governance layer for that project. So that's kind of another end of the spectrum. And then the opposite end of the spectrum, right, is the idea of just tokenizing equity and trying to make that as similar to degen tokens as you can do. So people trying to make tokens more equity-like, trying to make equities more token-like, and in the middle is ACE. And we have projects that do all of those. We're working on a project to tokenize SPVs right now that hold, stock of early stage companies and have some secondary trading in that. It's very, it's high friction, right? These are not going to be like pump fund meme coins in terms of how they trade, but you'd be surprised that you actually can get significant liquidity in them. It's just not full blown liquidity.
what in terms of like barriers for this meta taking off? Because I see ICM as like as this huge meta, and there's been, you know, we've had some ICM stuff in the past, and it's always kind of failed because like for one reason or another. I'm curious on your take of like why do you think the past projects failed? What do you think the barrier is in order for this to become like a
Yeah,
massive?
I mean, I think it's. I mean, this will sound self-absorbed, but I think it's legal.
Yeah,
And so the what was the problem with Believe? I mean, essentially, it's just loosely associating a meme coin with a startup, but the coin doesn't have any type of claims or any types of powers or any types of rights over that startup. And so that inevitably means the value of the coin is going to be in doubt, even if the startup does well, right? And so the legal engineering, that we've done, for example, for MetaDAO, to say, well, yes, there's this token, but then the founder has also signed a set of agreements that assign all the IP to this entity. You can go look up the documents of this entity. It says that they're never going to issue any equity. They're never going to monetize equity. It says that for certain key events, they're not going to do them unless a decision market also approves it, right? That is a fundamental that is going to, it's not like giving dividend rights or something to the token, but it is going to create sort of as close as possible to guaranteed alignment of the overall project scope with this token. And so that is part of the puzzle of solving the token only model. With ACE, it's okay, the token is basically a passport to be able to buy the equity as well. And that gives you rights, even though the token doesn't, and therefore you're somewhat protected. And then for tokenizing the equity, I think there were different legal puzzles there, and I honestly think we're kind of the first ones to crack that puzzle as well, because most of the tokenization projects have a very unclear legal ontology for what the token is. A lot. If you go look at some of the, I have articles on this. You can go look at the articles. They have excerpts from some of the tokenization offerings where they say, well, the token is a souvenir, or like the token is a reflection of the fact that on the transfer agent's books, such and such has been issued and blah, 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 right? So that means the token is worthless, right? What we've done is we've said, thankfully there are some corporate codes like Delaware's code that recognize this, that say a blockchain can be your stock ledger, right? But I think we're the first ones to fully 100% make it your stock ledger. Securitize partially, they say they use it as a partial ledger, but really it's just a hash that you have to have access to their off-chain systems to know what that hash means. So how can you compose on top of that? You can't. It's ultimately a completely permissioned system by that intermediary, and it's not truly on chain. It's just connected to the chain, right? And so you got to make it fully on chain for this to really work, for Ethereum to really be a settlement layer, or Solana to really be a settlement layer for securities transactions, and you got to go all the way with it. And I think we're the first ones to figure out all the legal drafting and the property rights theory and those sort of things around it, and fully embrace it.
Yeah, because if I'm going to get into a token, like, I'm either going to play it for narrative, or ideally I'd play it for acquisition, right? Like, if I'm a long-term investor, I might look at an ACE round and be like, okay, like I can invest in this token, and maybe if the company gets acquired, and I'll do the math, I'll figure out like how much equity I'll get, blah, blah, blah. Right. But yeah, I can hold the token, maybe, speculate on whether or not these guys are going to have an ACE round, and try and like play acquisition, I guess. And you can kind of do that here. Can you do that with any of the other ones, or no? Like, can you play acquisition, like the acquisition?
No. Yeah, I don't think any other platform is doing ACE exactly. Well, there's these things. There's some of these things like the Street and Sword and some of these others where they seek to establish like a permanent correlation between the token and the equity. And if the idea is that if there's an acquisition event of the company, the foundation has some obligation, or maybe there's some governance mechanism where you can vote on the idea that the proceeds of the stock becoming liquid would be used to buy back all the tokens at once in one single event, right? The issue that I see with that is a legal issue, a regulatory issue ultimately, which is that it's establishing a permanent fixed correlation between the token and the equity, and that basically makes the token into a securities-based swap, in my personal opinion, right? And if you look at how those things are trading so far, the token is trading at the exact price of the equity, right? Or like of 30% of the equity or whatever. Like the entire token supply is worth 30% permanently. So I think that's just not going to fly from a regulatory perspective, is my guess. But there's people making a case to the SEC that should be allowed, and so on and so forth. So we'll see. But that'd be the other way of getting at the acquisition proceeds.
So, I don't want to take too much of your time. I know we're almost at 40 minutes here, and I don't want to go too much over that. If you're able to, that's fine. But I don't want to.
I'm able to. Yeah, however long you want to go, I'm down.
But so one of the questions I have is, what's kind of without getting too specific, what companies are kind of not what companies, but are there people lined up? Like do you guys have a roster of people kind of waiting to go public with these? Is there a backlog? Are you seeing a lot of demand right now?
Yeah, it's not like huge, because pretty much as we can accommodate this very fast. You know what I mean? Mm-hmm. And we started out the unusual thing we did for Ace, just because there was a lot of attention around Pumpcade, is we password gated it, but we're taking the password gate off. And so just like all our other apps, it's going to be permissionless. So as fast as people want to use it, they basically can. There's one project in the pipeline that I think we'll probably launch next week. And then, there's a lot that have expressed interest. I think a lot will be doing it. I think as more Pump Fund hackathons happen, I think a lot of the Pump Fund hackathon projects will end up doing this, because it's worked out pretty well. And then on the pure security side, we have a really good partnership there that we're working on, but it requires a lot more. And so in a sense, they have a lot in the pipeline, but it's just a longer build, because there's so much compliance stuff that goes into true securities trading. But I think this will grow and grow. Yeah.
Yeah, it's worked out for us pretty well. I'll just show our round is kind of going. But there's this cool. Let me see if I didn't get logged in. You get this really cool dashboard thing, which is cool. I don't know if a lot of people are able to see this, because this is kind of reserved for the people that are doing the Ace round. But there's all sorts of stuff here. You can see how much you've raised. You have the ability to offer private tickets. You have the ability to to do in person. I think there's also the ability to do in person compliance checks if they're American citizens and stuff like that. So so it's pretty in depth. So I just wanted to kind of show my
I really appreciate that. That's a great idea, because you're right. Most people don't get to see the founder view, so to speak. And there's a lot that's gone into it.
Yeah. So it's really cool. We're enjoying it. We like it a lot.
Appreciate that.
What do you guys have in terms of immediate next steps, the next things you guys are going to roll out?
Yeah, so the big next thing that's going live, and unfortunately I can't say what project it is because of the rules around public solicitation, but will be, I've mentioned that we have normal SAF, safes, SAFTs, token warrants, in sort of our normal USDC denominated fundraising app. Is very, very soon, probably next week, will be the first priced preferred stock round fully automated on the app, right? Which I'm very excited about, right? That's been the end game for us for a while, or one of the milestones that we want to hit. So that's super exciting, because now we don't just have to do the early stages. We could do Series A, B, C, D, E, whatever. So hyped about that. And then other than that, what I'm really interested in is liquidity solutions. Getting some of these things trading. And presenting that as an attractive product where a lot of startups might want to do that with their equity.
Do you see a world in your kind of long-term vision of this? Do you see a world where people stop trading meme coins entirely and are just look, if there's no equity associated with this, I'm not even going to bother with it, or something this will enhance the make utility tokens preferable to just memes?
I think they'll always. No, I think meme coins will always have a role. It'll ebb and flow, in terms of, is it a utility coin? Is it a meme coin? Is it a sort of like app coin? Like, I would consider BNB sort of like an app coin, right? It gets some of the revenues from the app, but it's also kind of like a coupon, for using the app, that sort of thing. I just think people love to play with these sort of corporate finance Legos, and there's no reason to have fewer options, right? More options is always better. When I was negotiating against A16Z and Paradigm and some of these other big VCs during DeFi summer, when they were doing a lot of financings into DeFi Labs companies, the speech that I was given was, we love the double dip. We like the token and the equity, right? We get 2 exits, right? And that's never going to change. And maybe if you add a meme coin in plus a utility coin, there have been projects like Layer Zero, right? They had 2 coins and they have their equity, right? And I happen to know there was an active OTC market in their equity, right? So why not? Why not get a triple dip, right? I don't think this will ever change, because people love making money and they love degeneracy, and they love these different financing vehicles, and they all have different regulations. So why would you not ARB and use one for one thing? And maybe you can raise, after Clarity, you're going to be able to raise very, very freely with a non-securities token, much more freely than you could with a security. So why would you not do that? And then why would you not also do the equity as well, right? You would probably want to do everything.
So my last question to you is just, I think you touched on a little bit today, or during the conversation, but today, there's an article that came out. The SEC is looking to, kind of be really tokenized stocks, tokenized equities, things like that. Do you think that this trend is going to continue, like legally? Like, do you think?
By the way, what came out exactly? Because I had read like a rumor that they're coming out with this thing, but I haven't actually seen the thing.
Yeah,
the thing
let me see.
Out,
so it's what investors need to know about SEC's plan to allow tokenized stock trading. I don't know the full details on it, but it sounds to me like, it's basically going to allow for like 24/7 trading of tokenized stocks. The stocks would track the actual price of shares. I mean, I think it's coming up because we're seeing all like these tokenized stocks of like OpenAI or Anthropic or things like that.
Sure. Yeah.
So like, I don't know. It just seems like it seems like the regulation for this is starting to get softer and softer and softer.
Yeah. So this is, this is part of why I'm bullish. This is part of why I'm bullish on it. And I think a lot of people slept on what the SEC released a couple weeks ago, but to me that was huge. They released, I don't know whether it's called guidance or an interpretation or a statement in that case, I can't remember, but they were basically saying, if you are a web app operator of a DeFi style web app, and it happens to provide an interface facilitating the usage of a DeFi protocol that happens to have tokenized securities on it, we're not going to make you register as a licensed broker for that, right? It's really just a DeFi style interface. And, they gave certain parameters, et cetera, et cetera. But that is huge, because for years, even very pro crypto people were saying, look, the fig leaf that will give regulators is like the protocol is independent, but the app has to be licensed. But the SEC is saying if it's a decentralized protocol where tokenized shares are trading, then even the app doesn't have to be licensed, which is great. That's much more than people were ever shooting for. And it really opens up a lot of creativity. I mean, this was my bet anyway, obviously. Otherwise, MetalX, would have to be a licensed broker for what we do. But my bet was that we wouldn't need to, and now it's clear that we don't. So the other thing that the SEC came out with recently is, and this gets hyper technical, so I won't get into the details, is basically relaxing some of the reporting covenant requirements for SEC registered companies. Now, it's still a pretty high bar to whether you'd want to choose to be registered, but that's something. So overall, I think it will become cheaper and easier to become an SEC registered, fully liquid company. You will also have the option, especially through MetalX, hopefully, to have liquidity before you become an SEC registered company, right? And these things will just widen and widen and will become more liberalized, and there'll be more and more options. Yeah.
Well, Gabriel, thanks for coming on, man. I appreciate
My
you coming
pleasure.
on talking about this.
Yeah, thanks for doing an ace round. Really enjoyed it.
Yeah, it's really cool. It's like, yeah, like and it changes the dynamic with the holders too, because
Nice.
I was surprised actually how much our holders wanted to invest in the company. I suspect that's true for a lot of pump tokens, but I was actually pretty surprised by it. So it changes the dynamic, and I'm interested to see where it goes.
That's awesome, man. All right. Well, yeah, me too. Keep me in the loop.
Cool, cool.